Welcome to Wall Street to Bay Street, an update on our positions and what's going on in the market. It's been a few weeks since I gave you an update. I've been traveling on vacation for a few days, then in Chicago for a week, but wanted to see where we are in the market. I think I tweeted last week that investor sentiment was low enough that we'd probably get a bounce off that. There's been a significant bounce, 5-6+% in the markets in a matter of a week and a half. And at this point, I'm looking for reshorting. We've sort of been hitting the 111, 112 range, which we keep finding resistance. The market's been in a range-bound market. So over the next course of next week, we'll look at a number of different places where we can enter. Obviously, over the last few days, our SSO position has taken a little bit of a heat, but we scaled out of it here. And as I've said in the past, when you sort of get down to this level where you're at second standard deviation, you can either get out fully or just start writing puts against your position to generate some income. So there we go. Yes. The one position which we did pick up, I think last week, August 31st, was in Monsanto. I'll pull the chart right here. We've been talking about this in the past, looking for a good entry. We got our entry. I think we got it somewhere between 52 and 53. On the 31st, when they came out and pre-announced, a little bit lower expectations. Since then, the stock has risen up 5+ points as the market has risen too. We didn't get a full position. We were scaling in, hoping we'll get more of a pullback. But at this point, if we get up to that second standard deviation, I'm likely to take profits and wait for another pullback to re-enter the trade. Another position that we have, another small position, is gold. We have it through the GLD. We had looked a ways back, 3 or 4 weeks back, about, I think it's sort of a missed pullback right here, trying to get long the GLD or adding to our position. Didn't quite hit where we wanted to go. It might even have been back here to add a significant portion of the position. But actually, I think it was this pullback right here. I think we were looking for somewhere in this ballpark, and we came within $1 or $2 of hitting it. And then we just had a massive rally from there. Now, we're getting a little bit of a pullback here now. The MACD is crossing over, so if we can get sort of a $25 or $35 pullback in the GC, I would look to re-enter the trade. I think gold's looking very strong over the next 6 months to a year. It's obviously been in a sort of a 10-year bull market, and I think it will continue as governments around the world continue to print money. Another position that we can look at here is the VIX. The VIX is getting very low. It's sort of back to the lows it was at our highs in April. So if you coincide the highs in April, the low in the VIX, the highs now with the low in the VIX, now maybe either it's time to get long the VIX, looking for a significant rally in the VIX, because this thing can move. If you look at this went from 18 to in the 30s in a matter of a month. So that's almost 100% movement, versus if you look at shorting the market, you're not going to get 100% movement shorting the market. God, heaven help us, we don't. So here you can do it through calls. You can write puts to actually get the stock. There's a number of ways you can do it. But it's just indicating to me that complacency is getting there. We're getting that low in volatility in the market, and it's about time that we might see some pickup in volatility. The other interesting point to note, the 1987 crash, when we had that 30+% drop in one day, Wall Street, the movie, came out right around that time, right before the crash. And a little tidbit, Wall Street 2 is expected to be released widely on September 24th. Obviously, anything like that would be coincidental, but if you look at something like Elliott Wave and stuff like that, you can see that societal moods drive the market just as much as fundamentals or technicals do. And that may be the case here. One other way you can play it, which we've talked about in the past and which we've had puts on, is the FAS. Or if you want to go long in sort of a 401k type account, the FAZ, which is its counterpart, its financial directions. But the FAS is approaching its second standard deviation. Every time we've done that, sort of smack down. So sort of play this range, and you get the natural degradation of a triple triple financial daily reset, as we've discussed in the past. One other area that I'm shorting is Brazil. EWZ is the simplest way to get exposure to Brazil. Once again, like everything else, we're approaching the second standard deviation. Brazil has been strong. It's been growing GDP very well, all things considered. But should there be a major slowdown in the developed world, in the U.S. and Europe, it will hit Brazil because a lot of this is commodity related. And they're going through some of their own issues there too. They've had great growth, they have great demographics, they've got tremendous assets in terms of commodities. So long term, I'm a strong believer in Brazil as long as they keep their fiscal head on their shoulders. But I would look for weakness in there too. Because if you get significant weakness in the U.S. and Europe, you tend to get a higher beta weakness traded in some of these markets, especially Brazil. Now that's a wrap up for Wall Street to Bay Street. Next week, hopefully, this was our first week back, so we sort of took it easy. Got a feel for the markets, even more quiet with the holiday and the short week this week. But we will be looking to do a few videos each week now going forward, hopefully Tuesdays and Thursdays, and looking at adding a few more types of trades for people to look at. Good luck and good trading, and we'll talk to you soon.